Hello everyone, my name is Isma from fxkampala. Well, I do welcome you back to our YouTube channel, and in our video today we're going to look at an amazing thing. And this video we're going to be looking at the fair value gap, which some people call the FVG. Now in our video today we're going to look at what is a fair value gap. Okay, two, we shall see how we use a fair value gap. Three, we shall look at how you can use a fair value gap as a strategy. Then we shall see, if you use it as a strategy, where do you put your stop loss, where do you put your take profit based upon the fair value gap. And later on we shall conclude with our video. So it's going to be really an amazing thing, because so many of you have asked me, have actually mistaken the difference between fair value gap and smart money. So in this video we're going to answer all these questions, so just make sure you watch this video because we've made it as simple as possible. So if you haven't subscribed, please do, such that you do not miss out on each and every content that we release on this channel. And also follow, subscribe, share to our YouTube, to other social media platforms of ours. You'll get such information that is going to be affirmative. So without any wastage of time, let's get directly onto the chart. We try to see how we can use the Fibonacci, or rather how we can use the fair value gap. Well, thank you. As we get to reach on our PC, first and foremost, for those that don't know what a fair value gap is, basically a fair value gap is literally like a gap that shows imbalances that are within the markets, that is probably between the buyers and the sellers. This occurs when there are insufficiencies or imbalances in the markets, or when the buying and the selling are not equal. Fair value gaps can become a magnet for price before continuing in the same direction. So usually market has a tendency that if it's to move in any direction, okay, it has a tendency that it will never leave any gap. But then if it happens to be so and it leaves a certain gap, let's say if this market is coming downwards, so if it happens to leave like for instance, let me try get my pen. Maybe I can illustrate this in the easiest way, short way possible. So as the market is moving downwards like this, and it happens to have left a gap in between here that showed imbalance between the buyers and the sellers in the markets. So what it does, this gap that was left there shows or works as a magnet. In other words, it shows that this market has to always first come, fills this gap. So the coming back and filling that gap, okay, is what we call a magnet. Okay, so it comes, it fills this gap, and then decides to continue wherever it was going, but after, of course, filling this gap. Now, what causes these gaps in the markets are usually a couple of factors. They can be mainly economic factors, okay, such as interest rates, unemployment, okay, sudden news release that we never expected. This, of course, also an abrupt sentiments in the markets. Buyers do usually sometimes have a tendency of basically ideally spotting certain moves, and ideally say that maybe Euro USD and the biggest number is probably on the short side, short position. So this causes the gaps within the markets. And of course, in our video today, the next thing that we need to see in our illustration is going to be what this gap means in our context. So the causes are basically those. They can be economic factors, political, sentimental, or social factors, okay, so that are probably sometimes abrupt, okay, that cause the buyers or the sellers, okay, be smaller than the other, and in the due process we happen to get the gap at that very particular moment. Now let me proceed on with the illustration that I have to present to you. Now, in my illustration, it's quite easy and it's quite simple before we can actually go to the real market life example or chart experience. Now, once you look at, let's say if you have this candle 1, 2, 3, when you look at candle 1, 2, 3, usually the candle in the middle, okay, should never be left with any gap. What am I trying to say? This is what I'm trying to say. Hold. So if you try to look at the high of this candle and the low of candle number 1, the high of candle number 3 and the low of candle number 1, if you try to join them, okay, they should actually not leave any gap. In other words, sometimes they even surpass and you find them, you know, past each other, meaning that there is nothing like a gap, which isn't the case here. Once you look at this candle, let's say 1, 2, 3, this candle in the middle, if you look at it, if you're to actually compare the low of candle 1 and the high of candle 3, there is a gap here. They can't meet. There is a gap. It means that there is a gap. This gap is what we consider as FVG, or a fair value gap, which shows that there is imbalance in the market. Of course, we have looked at the reasons or a couple of factors that can lead to this. Now, once this happens, if you critically look at this candle, let's say this is 1, 2, 3. Usually, we compare this in triple candles. It's sometimes referred to as a triplet, it's referred to as a triple pattern. Okay, it's referred to as a triple pattern. So there are usually 3 candles. You need to consider the previous candle, the previous one, and the current one. Okay, you see if there isn't anything like a gap, just as you have seen. So literally, if you look at 1, 2, 3, the 3 candles, if I try to join them, you realize that there is nothing like a gap as it is here. So sometimes they even surpass and they exceed each other, or maybe this you may find it somewhere further down. Okay, not as exact as it is, because you may find that this candle might have gone up to this point, low or down. Okay, now having realized that we have a gap, and we said this gap usually works as a magnet. Okay, or if it's a gap, the market has to always come and fill this gap before it continues downwards. There are rare cases whereby it will come and fills it, but then comes back up. I'm not saying that it can't happen. It can happen. It can come, fill. Filling is basically coming up, reaching that gap, and then goes wherever it goes. But out of 197%, it will actually reach, fills, and then continues in the downward directional movement. There are rare cases whereby it will come and fills and then comes up here. Okay, now if you can't spot these fair value gaps by yourself, there is a trading tool called Smart Money Concept Lux Algo. It actually drafts these fair value gaps very well and smartly, and easier for anyone to trade with them. Now, how does the market fills this gap? Now, before the market coming to fill this gap, we cannot, and then they put the secondary. First it can come, reach the bottom, any candle touches the bottom and then comes down. That is filling number 1. Or it can just come, reaches in the middle, that is also filling, and then continues in the direction. That is also filling number 2. Or it can come, reaches the top. Okay, sometimes it even goes a bit slightly higher and then comes back down. So all those are the various technicalities, the market through which it can fill the gap that it has left to balance now and then proceed to the downward market direction. Now, once you to enter at this particular point, putting your sell, so we always consider the stop loss slightly above. Don't put it on exactly the top. The same alternatively happens if you're probably it's an uptrend. Okay, this illustration is generally for a downtrend. Okay, so market coming, filling, and then continues in the downwards. So if it's also in the opposite market structure formation, then the same has to happen. Okay, the same has to happen too. This is mainly so favorably traded, especially if the market is in a trend. Okay, however, it can also happen in a range, but mainly so works perfectly and fantastic if it is in a trending market. So Once you enter here, the risk reward ratio we always use to 1 to 3, okay? 1 to 3 or 1 to 2.5. So that's the risk reward ratio. And once that is being met, it's in place, then of course the market will always hit, provided you know what you're doing and mastered it very well. You know from the core roots, you've watched such videos, then it will always work out. 3, I would recommend this always to be used in relatively shorter, smaller time frames. That is 5 minutes, 15 minutes, 30 minutes, okay, when you're trading fair value gaps, okay, because it may end up disgusting if it's traded in relatively bigger time frame because of the patience, the time wasted, and of course it will always take to come and fill the gap. So some people are not that patient to do this. So let's before wasting a lot of time, let's just get onto the real life practical example and see what literally this can look like. Then we proceed and see how it will work out. So for this illustration, so with this example, we shall use US dollar South African rand, and the time frame is 15 minutes. So you see, as this market was moving, it decided to turn. Okay, something that I was trying to elaborate here, that whenever you see, once you look at this candle, 1, 2, 3, once you look at this candle, the candle in the middle was fully, when you look at the previous high, previous high of this candle, and the candle number 3, you realize that this market, the 2 already met and this one was filled. Okay, so there is a balance. Even the same happens here, there is a balance. Once you look at this candle and this one, if you're to compare the high of this candle and the low of this candle, there is slightly something like a gap, and this gap is referred to as a fair value gap. So the market will move having gotten this. So regardless of any gap that may come in the future, okay, strictly on this candlestick formation or setup formation, we may not consider it, because the market will always come and, you know, aims at the first fair value gap to be filled, and once that is filled, then the rest of the others that probably must have come in the future also being filled. So now we realize that this is the number 1, the first fair value gap. So market went, and the process of going up, it was attracted, or it came back to fill this gap, and in the due process of filling this gap, we put a buy, and then the market, you see, it went to this direction. So it's as simple as that. The main important thing is that you have to do is to spot and be keen about the fair value gap, master the concept, and then it becomes quite very easy, affirmative, and simple to be used as a strategy. So it works in all currency pairs. For that information, I really shared the contact, a WhatsApp number at the beginning of this video. So if you find such information important, okay, don't hesitate to contact us in case of mentorship, in case of issues, you know, here and there that are not working out. Don't hesitate to contact us. We shall always be in position to come in and help where necessary. Have a lovely day. Bye-bye.